I'm going to show you the most simplest Forex strategy ever created. Let's get right into it. Alright, so we're here on gold. Now for this strategy, you can use whatever currency pair you want. It does not matter. Now, after a long time of watching Forex YouTube videos, trying to learn strategies, I actually came up with this strategy because I was just like, I'm going to stop watching everyone's strategy videos and I'm just going to figure out exactly how to trade. So I just looked at the charts raw and tried to figure out why they move, how they move, like what makes a reversal happen, right? I love trading reversals because it gives you the best risk to reward. So for example, if we're here on 15 minute, I like to trade the 15 minute, but what you have to do is you have to look at the overall time frame. So I jumped to a higher time frame, like the 4 hour, just to see where things are going in general, right? So we have a big uptrend going on, cool. We have a nice little downtrend, and now we're going into an uptrend. So because I know we're in this uptrend, I know I can look for buys, right? Because I always wonder, I'm like, okay, if on the bigger time frame we're in this uptrend, what if I were to enter like these trades right at the very bottoms of these little spike downs? You know, like how do I enter at these? How do I enter at these bottoms? So I kind of looked at the chart and I'm like, what makes the trend continue? So if we jump to the 15 minute, every time, you know, price comes down here, it continues, comes down, continues. But I was like, I'm not going to enter as soon as price comes and touches the trend line, because if I were to do that, I would probably get stopped out of a lot of trades, right? Like if I had my stop loss here, I would have been stopped out. You know, it's not like price goes up every time it touches that trend line, but I'm like, what makes price continue going back up? And this is what I figured out. I'm just going to get rid of this trend line for a second. I figured out that price reverses every time price breaks the last lower high, right? So I'll show you the lower highs. This is a lower high here, a lower high here, a lower high here, a lower high here. So these are the lower highs. So then I realized when the very last lower high gets broken, that's when price continues to go up. So for example, and we have to make sure that we see price close above the top of the wick. So here, I wouldn't really consider this a break. Price just barely came up and then dropped through. We want to see a nice candle come up and close for sure above our last lower high. So I was like, okay, cool. So this was the very last lower high here. And when price broke that high, it continued up. So I was like, okay, so now we're on to something, right? Once again, come back down here. All right, like if I pop out this trend line here, boom, like that. All right, the last touch was here, right? Okay, let's mark out the lower highs. So the last lower high was here. Price broke this lower high and then continued upwards, right? So it's very simple. And that's how I like to keep it, very simple, right? Okay, we'll try this again. We come down here. The last lower high was here, right? So we mark it out. Price broke the last lower high and then went straight up. Try it again. We'll come down here. What's going on down here? Okay, let's see. We have lower high, lower high, lower high. Price breaks the lower high, boom, and then goes straight up. So I saw this pattern happening over and over again, and I was like, this is really simple. If I just trade every time price breaks a lower high in a continuation of an overall higher trend, I'm going to make money doing this. Super simple. But now the part that's very important is trying to figure out where to actually enter, because sometimes price does come back down. And then that's when I came up with the idea, okay, if price, you know, tends to retrace every time it breaks, it pulls back a little bit. What if I could get these really nice entries? Like that would help a lot. If I can get some really good entries on these trades, I could have a higher risk to reward and make more money. If you guys want to use the same broker as me, sign up with Hango Trade. They offer up to 500 leverage and spreads as low as 0 pips. You can also open an account with as little as $10, which I find really neat. I personally trade with them. They're great. If you want to use them, the link will be down in the description below. So then I went back to the charts again, and you know, obviously this happened over a long period of time of studying. I didn't just figure this out at once, but over time I figured out more stuff, right? I was like, okay, What's another trend that I noticed happens? I was like, okay, so, you know, we have this downtrend, right? Lower high gets broken. Also, use the MACD, and MACD is really helpful to determine highs and lows, right? Like each one of these green things is a high, each one of these reds is a low. So I know where the last lower high was because it's marked out by this green pulse here. So that was our last lower high. Anyway, so I noticed, okay, every time there's a lower high that gets broken, where does price always tend to pull back to? Well, for starters, we can mark out this red. See this red little pulse right after our lower high? Let's mark out these red areas, the bottom of the red areas. Boom. Okay, that's interesting. Price pulls back into that. Okay, cool. Let's look over here. So the last lower high was here. Price broke it. This was the red area here on the MACD. All right, let's mark out the lowest bit of this red MACD. All right, let's mark it out down here. Interesting. Price came back and pulled all the way back into that and then went up. We'll just keep doing that. Okay, we'll mark out this area here. Cool. Price broke there. Let's mark out the lowest area here of this red MACD. Wow, would you look at that? Price broke and then pulled back right into it. Interesting. We'll do it again. Mark out this downtrend. Cool. And then price broke the lower high here. We'll mark out the lowest area here. Okay, cool. Price did not pull back into this very last area, but that's okay, because we did not lose the trade, because we would have never taken the trade. But when we do take the trades, you know, look what kind of risk to reward ratios you're going to get. You know, if we put our entry right in our area here and had like a nice tight stop loss, look at the kind of risk to reward ratios we're going to get. You know, that's a 10 right there. Let's see what's going on here. Mark it there. You know, let's just say we had something like that set. That's a 12 risk to reward right there. Okay, pulls back, enters there. You know, this one right here, say even a 5 or even more if you held the trade longer, right? That's another 8. So it's very simple. It's a super simple concept, but there are some technical issues where people get this wrong, and I'm going to go over that right now just to make sure you absolutely take the best trades you can, because you will lose, because this doesn't happen every single time. I mean, it happens a lot of the time, which is really good, but we want to make sure we're entering when we should be entering, right? And we're going to go over that right now. So first of all, you want to make sure you're entering based on the higher time frames, right? So if we're trading on the 15-minute, if that's our base time frame, we want to be looking at the higher time frames like the hour or the 4-hour, just to see where price is going, right? So like, for example, we wouldn't be taking buys if we saw this. This is a downtrend here. We wouldn't be on the 15-minute looking to take buys, right? So for example, we'll show you if we were looking to take buys here. For example, like this is a lower high here, price broke above it, you mark out the bottom of this, and you know, price came back in, and price came back in, and then just continued downwards. But we want to be taking buys here because we're clearly in this downtrend on the 4-hour. So number one, you want to make sure you're trading in the direction as the higher time frames. So that's the biggest key for this. The second thing, you want to make sure the candle is actually closing above your lower high. So for example, go back to the 15-minute. You want to make sure you get a proper close above your last lower high. So this would be a lower high here. See this? See how we have 1, 2, 3 candle closes above our lower high? That is what we want to see. We don't want to see something that, you know, isn't like that. So for example, if we marked out now the bottom of here, look at that kind of entry would it get off of this wick. Very good entry. But what we don't want to see is people entering in the wrong areas. Let's see here. Okay, so for example, This is a nice little downtrend here. Now, this is barely a candle close above. You know, we barely closed above our lower high here. Just barely. We don't want to see that. We want to see, you know, a nice close to something like this. Let's say it closed up here. That's what we want to see, or even more, or even if we saw more candles form, right? We don't want to see just that little peek through. That doesn't count, because it's showing that there wasn't enough pressure to push above our last lower high, which is when we have reversals. So we don't want to see that, because if you were to enter there, right, you would have thought, okay, cool, then my entry will be here. Then you would have tried to enter there, and then you would have got stopped out. So yeah, it's really simple. Try to practice it. Go to the charts. This is exactly my strategy. This is how I trade, and this is how I came about to find this kind of strategy. It works really well if you're patient and you wait for the setups and you wait for your confirmations. All my other videos will explain that as well. Thanks for watching.